real estate, household products, food and beverage, but you're still up about 1.5%.
All right, so let's get to some of the gainers. So much to choose from, but I had to go to Twitter. I mean, man, when this finally started resuming trading after it had been halted for such a long time as we awaited news, of course, that Bloomberg exclusive story that Elon Musk had sent a letter, filed with regulators that he was planning to go through on his plans to buy Twitter for $54.20 a share. Stock was halted, though, for a long time. When it resumed trading, up 22%, but as Tim kept reminding me, still below $54.20 a share, closing at $52 for the most part. So nonetheless, that's certainly a standout. Rivian, also a standout, another player in the EV space. It was up almost 14% in today's trade. This company coming out, reaffirming its goal to build 25,000 EVs this year. So that actually helped lift also the overall EV space. We saw Lucid also trending higher. Of course, they make delivery vans for Amazon, which is one of its biggest shareholders. And then Amazon, up about 4.5% in today's session. Nothing like being the favorite play here. JP Morgan's favorite internet stock by a wide margin is Amazon. The firm positive on the company's prospects of the remainder of the year. So they were all in on that one. So again, Amazon, Tim, up about 4.5%.
All right, the pickings were slim on a day when you see so many stocks higher, but I did manage to find some decliners. We got Maravai Life Sciences Holding Company. It's about a $5.5 billion company. It hit 52-week low today, fell by close to 13%. They developed drug therapies, diagnostics, vaccines, and more. An executive shakeup. The founder and first CEO is out of the company, though he's going to be executive chair. And then you got Danaher's Trey Martin coming in as the new CEO. Blue Apron fell yesterday by more than 45%. It's down another 5% today. Shares trading just at $3 right now. And then this is an interesting one. Digital World Acquisition Corp down 5.2%. Of course, if Elon Musk does succeed in buying Twitter, then many people do think that Donald Trump will come back to Twitter. So not necessarily good news for Truth Social, of course, which is set to merge with Digital World Acquisition Corporation.
You did it, Tim. They all stayed in the red.
It wasn't easy. I had to go to my backups, Caroline.
Meanwhile, I mean, look at this for a full screen. Only one tiny bit of red on this global macro mover, and it is the US dollar. Not often that we've been able to say that, but for again, we see the dollar index weakening on the day because we start to, for whatever reason, decide that what the Reserve Bank of Australia, so too will the Federal Reserve do, and stop the increasing hikes that we're likely to see, and maybe people dialing back how hawkish the Federal Reserve will indeed be with the softening data. Remember that all going back to the JOLTS data that still showed that, well, they've got a very tight labor market in and of itself. There's still 1.7 people for every one job opening at the moment. Nevertheless, the dollar goes weaker by a percentage point. That means the euro is stronger by 1.6. We see, the Swiss franc pushing up by 1.3% across the board, a push higher versus the US dollar. The commodities, therefore, take that dollar weakness and run with it. We therefore see metals get a bid on. We get oil markets doing their thing because, of course, in Vienna, OPEC Plus, the leaders are meeting there. We're likely to see even a 2 million per barrel day pullback in production. Brent crude rallies by 2.8%. We see natural gas getting a lift as the dollar goes weaker. We see this dialing back of hawkish sentiment mean that a lot of these commodities start to fire up as well. And a movement into yields across the board. Not the case, of course, potentially over in Australia, but everywhere else we do see this movement into the bond market. Maybe this dialing back of expectations from hawkish narrative around the world, Taylor.
You see that definitely on the front end of the yield curve here after a huge move and a big rally yesterday in bond price higher, yield lower. Still a little bit of money coming into the front end of the market, but we're going to call this stable and stability. Unch on the day really on 2s and 5s and 10s, and yield still climbing just a little bit, Carol, when you think further out on the 20 and the 30-year yield, but really stable after some of the big moves that we had yesterday.
All right, so here's the big question and the big predicament for investors that are out there, especially after this 2-day rally. What a strong rally that we've seen, so much breadth in this to the upside. But at this point, we have to be asking us, what has fundamentally changed in terms of the outlook? And, we know the Fed's going to continue raising rates, and that is going to continue to slow down the economy. And there is still, obviously, some would say we're already in a recession, the risk of a recession. So you do have to start thinking, okay, valuation of the market, are we kind of now more where we should be after being very, very oversold?
So maybe what changed is a little bit of softness, and I know, Romaine, you gave me a hard time about this earlier, but we are seeing a little bit of softness when it comes to JOLTS, but still really high numbers. And, maybe some softness when it comes to those manufacturing numbers that we got yesterday, so that inflation is decelerating just a little bit?
Yeah, well, I mean, look, I understand it. I mean, that's what everyone wanted to see, particularly because every single other economic data point seemed to come in stronger than expected. So I think any softness is going to give the market a little bit of comfort. But of course, we know this could all sort of change on a dime. It's not just really about, 10 million job openings or the unemployment rate or whatever we're talking about. We have an unemployment rate that's still persistently below 4%. We have a CPI data that is still around that 8% level, at least on the headline number. And even when you look at the PCE at a 6%, and I don't think there's any indication that that's going to materially change in the next month.
And on-farm payrolls that comes out on Friday and is likely to be 263,000 jobs added. We're likely to see unemployment, as you say, still languishing at 3.7%, and we're still looking across to next week where we get the inflation print. All of this still speaking to a very strong, resilient U.S. economy that the market is desperate to persuade otherwise in terms of what the Federal Reserve should be doing.
And maybe a Federal Reserve that, as we've been talking about, has the leeway, has the leverage to continue to hike because everything else hasn't fallen apart just yet. So they can continue to tackle and raise rates quickly because the labor market is very much intact.
And they've made it clear they want to not only sort of get inflation down, but really get back down somewhere near their target of 2%. And that's going to take a long time. And so even if you do get a sense that they may pause or maybe they're not as aggressive, there's no sense, and I think this is partly what's being priced into the market right now, but there's no sense right now that they're actually going to start cutting. And I think that's going to have to be reconciled, these rallies, with that notion. And maybe we'll hear from Powell and company soon on that, to be sure.
Well, Michael McHugh making that point, there's one thing of the Fed stopping raising rates. It doesn't mean that they automatically start cutting rates, and we have to remember that. And so that impact, certainly on the economy, will stick for some time. All right, guys, that's a wrap. We got to run our simulcast coverage Beyond the Bell on radio, TV, and YouTube. We will count you down to the close again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so it does make you wonder, Tim, can we make it 3 in a row? Like, will the rally continue tomorrow, or do things slow down? Especially we've got a jobs report coming our way. Because fundamentally, I thought it was interesting what Romaine did in terms of inflation's still high. There's still some metrics that are really troublesome. And, Fed officials continue to say, we're going to keep on raising rates.
Well, remember, the market is, and like this is so basic, but the market's ahead of, the economy, right? The market looks forward. So it tends to react earlier to things.
Overreact sometimes?
I think it's fair to say that. But who am I to say?
No, but you do, like, maybe the market was very oversold. If you looked at a lot of technicals and some of those metrics told you it was oversold, you can get a bounce off that low, but it doesn't mean necessarily going to continue to the upside or start a new rally.
Okay, plenty for us to talk about tomorrow and, as we continue
Just
over the next
a few
hour.
things.
In the meantime, let's get an update on world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. The Biden administration is taking additional action on abortion rights and issuing new guidance from the Department of Education. Education Secretary Miguel Cardona says $6 million in new Title X grants are being distributed to schools across the country to prevent discrimination.
My department is issuing a new resource to remind schools of their obligation under Title IX. For 50 years, Title IX has protected students from sex-based discrimination, and since 1975, it has also protected students from discrimination based on pregnancy, termination of pregnancy, or any related conditions.
Cardona says students should also be given additional protections when requesting medically excused absences from class. Airlines will be required to give flight attendants at least 10 hours off duty between shifts. That's one more hour than currently given. The new rule was announced by acting FAA Administrator Billy Nolan, who says the extra hour of rest would contribute to safety.
Flight attendants are the foundation of aviation safety's culture, starting with cabin safety.
Nolan says he signed the paperwork making the change this morning. It should take effect in 90 days. Country music star Loretta Lynn is dead at the age of 90. A statement from her family says she died in her sleep at her Tennessee ranch earlier today. She was known for songs tackling issues like cheating husbands and divorce. The Academy of Country Music chose her as the Artist of the Decade for the 1970s. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So you heard our conversation with our TV colleagues. We were talking about, the rally, what's fundamentally changed. There's still inflationary pressures. But if you look at the Manhattan housing market, which has been hot, it's coming down.
Can't be hot forever.
No.
Actually starting to cool. Sales are stalling, which perhaps isn't that surprising, though there are some kind of nuances when it comes to Manhattan real estate that aren't necessarily tied to the mortgage market, because you do have a lot of folks paying in cash. But let's go to the numbers here. Sales of co-ops and condos dropping 3.7% in the third quarter from the previous 3 months and more than 18% from a year earlier. That's according to the appraiser Miller Samuel and brokerage Douglas Elliman Real Estate. They said in a report earlier today, the median price on transactions completed slipped 7.6% to $1.15 million from the second quarter.
All right, so here's a quote from Jonathan Miller, who is president of Miller Samuel. Quote, the market is resetting, excuse me. Let's get the quote right. The market is resetting. It's a soft landing or a settling. And let's just point out, while prices are still higher than a year ago, Manhattan's market is easing after more than a year of ballooning prices and frenzied activity fueled by soaring stock prices and low borrowing costs. The Fed's plan to hike interest rates will continue to cool sales. This is from Jonathan Miller, president of Miller Samuel. This is where we talk about higher rates has definitely impacted mortgage rates in a big way. And that's a part of the market, our economy, that has definitely seen a slowdown overall.
Did you go over these September numbers from a year earlier? Listen to these,
What do you
Carol.
got?
The number of Manhattan homes entering contract in September was down roughly 32% from a year earlier. It's the sixth consecutive month of year-over-year decreases. It's the market's pipeline pointing to continued cooling. The high-end part of the market has been hit the hardest. Contracts for homes priced at $4 million or more falling nearly 50% in September from a year earlier.
Interesting. And you wonder how much is market related, right?
Yeah.
We've seen such a downdraft, right? September.
Would be a good time, potentially,
To buy?
if you could get a mortgage that, is under 6%.
Trying to tell me something?
I don't know.
You want to share something with everyone?
I'm not giving any advice here.
Are you looking?
I have no idea. Always looking.
Always.
Yeah.
Anybody who owns property is always looking.
Always
It's just
looking.
the way it is. All right, you're listening and watching Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Elon Musk revives his bid for Twitter at the original offer price of $54.20 a share, potentially avoiding a courtroom fight over one of the most contentious acquisitions in recent history. Twitter rallied today by 22.2%, finishing the session at $52 a share. It was an up day for the Dow, the S&P, and NASDAQ as stocks extended their rebound from deeply oversold levels. S&P today at 3790, up another 112 points, up 3.1%. Best level of the day right into the close for the S&P 500. The Dow today up 825, rallying again by another 2.8%. NASDAQ up 361, up 3.3%. 10-year yield 3.63%, 2-year yield 4.10%. Spot gold up 1.5%, 17.25 the ounce. West Texas Intermediate crude oil was up 3%, 86.15 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, on the Bloomberg recently, a story noting EY research about the global IPO market continuing to plummet as the third quarter came to a close. In numbers, here's some. That meant global IPO volumes were down 44%, with the U.S. market set to record its lowest IPO proceeds since 2003. So that's pretty significant.
Yeah, but I remember one, Porsche.
Yeah, but that wasn't in the U.S. market. That
No,
was overseas.
I know. It's been pretty
Just
brutal.
Note to self.
I remember an IPO one time.
Far, far away in a galaxy unknown.
Let's get to Rachel Gehring, IPO leader at EY Americas. She joins us once again on the phone from Nashville, Tennessee. Rachel, good to have you back with us this afternoon. How are you?
Great. Thanks for having me.
Okay, so it is pretty bad out there. I mean, I can literally name, the IPO that I remember over the last few weeks. When is it? Any sign that things are starting to turn?
It is definitely a slow market out there. This has been our slowest start in the U.S. In over 6 years. I think the rest of 22 is going to be difficult. We've got the midterm elections, the holidays, and so forth, and just the amount of uncertainty out there is not favorable for IPO conditions. So the remainder of 22 is going to be tough. I think companies are really looking ahead to the first half of 2023 and really looking to target that window. And hopefully 2023 we get to a strong start.
All right. So give me some help here since you track the IPO market. Obviously, if you're taking a company public, you don't want to take it into volatility or not a great market environment. Is there something, though, about IPO numbers, activity, conversations that tell you about market capitulation, market volume? Market, kind of bottom, rather, excuse me.
Well, I think what's holding companies back right now is just the overall uncertainty, lack of predictability. All companies, regardless if you're private, public, that are all facing the same headwinds with geopolitical tensions and rising interest rates, inflation, and so forth. So making it difficult for companies to navigate through that. But then when you think about it in an IPO context, this level of uncertainty does not attract investors. And then we still have the lagging performance of the 2021 IPO class that's also making an impact for IPO aspirants today. And so it's making it as a tough market. Valuations are still resetting from the highs of 21. And so there's still this disconnect.
Well, there was a little bit of M&A news today. I don't know if you saw it, Rachel. It was, I'm being sarcastic, of course, for anyone who's been listening, but Elon actually taking over Twitter at $54.
Known as Elon and Twitter?
Yeah, we talked a little bit about it this afternoon. Does it mean if we're not seeing the IPOs, do we see any sort of deal-making move to other parts of sort of the deal's ladder? Do we see more M&A or more companies that are private being bought by publicly traded companies or other private companies? Do we see an uptick there at all?
Right now, we're seeing a softening across all of that, frankly. Like when we think about PE, private equity and venture capital, we're seeing a pullback there as well. This is very much a risk-adverse environment at the moment. And so those type of investors are really being diligent about where they put their money. There is a lot of dry powder out there, but we're seeing a very focused and disciplined manner in how they're investing today. So there is a pullback around M&A. I'm seeing a lot of investors, private equity, venture capital, and then companies themselves investing within the company, taking this time to really challenge and execute, pulling forward future plans to strengthen the company, and whether that is, buying adjacent companies, buy and build strategies and so forth. There's some of that going on, but there's an overall pullback across the market.
Hey, Rachel, let me ask you something, because earlier this year, I think it was about 5 or so months ago, I did a panel here with our Bloomberg Live group. It was with Catherine Keating, the CEO of Investor Solutions and Wealth Management over at BNY Mellon, and then Lynn Martin, president of the NYSE Group. And we talked about market volatility, and I believe it was Lynn who talked about the connection between the VIX and the IPO market, because we were talking to her about new issues coming through her exchange. Is that a metric that you keep an eye on? Right now, the VIX did come, it popped back below 30 today. Do you watch that and the connection there?
Absolutely. We track the VIX, and that measurement of volatility really helps to inform what is happening in the IPO market. And as you mentioned, the VIX, just below 30 right now, it's still very, high in the perspective of what IPO investors and just the overall market sentiment wants to see around IPOs, where, in stark contrast to 2021, where the VIX was remarkably low throughout 2021.
So we talked about different metrics here, but what has to actually shift when you look at the market to sort of give you a sign, just in the last minute that we have, Rachel, that the IPO market will start to roar back? What's the leading indicator we can watch for?
We need some of this volatility to stabilize. We've been in high interest rate environments before, so the IPO market can function in a high interest rate environment, but we need a lot of the uncertainty to start to stabilize. We need valuations to stabilize as well. I think what will help build momentum around IPOs is that the companies that help build momentum and start to come to market will be those companies that will probably be larger scale companies, evidencing both profitability and growth. Last year in 21, it was growth at all costs. I think the next group of companies are going to show profitability and just a level of predictability and years under their belt.
All right, Rachel, we got to run. Rachel Gehring, IPO leader at EY Americas. I look at the Renaissance IPO index. It is down about 47% so far this year. Not good.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, the most read story on the Bloomberg, Elon Musk reviving his $44 billion Twitter bid, aiming to avoid a trial. We've got some more analysis from our Bloomberg intelligence team. It's coming your way in just a moment.
Yeah, we're looking forward to that. My big question is, why isn't this trading at $54.20 a share?
Why isn't it, Tim?
No, that's what I'm wondering.
Okay, well, maybe he's got some answers. We're going to check in with Mandeep Singh in just a moment.
First up, though, we got less than a half hour to go. And Charlie Pellet, we just wanted to say congratulations on 30 years.
Happy 30.
It is what a joy it has been over the past 30 years. And here's to 30 more, and here's to 30 each for the two of you. Here's what's going on. Elon Musk, as you guys mentioned, revived his bid for Twitter at the original offer price of $54.20 a share. Twitter ending the day at $52 a share, up today by 22.2%. A lot of great reporting from our team. Mandeep Singh, of course, will have a lot more to say about Twitter coming up in just a moment. Big day, another big day for the U.S. stock market. Stocks extending their rebound from deeply oversold levels. Traders weighing whether it would be realistic that central banks moderate their aggressive stance to prevent a hard landing. S&P 500 had its best two-day surge since April of 2020. Today, the S&P up 112, up 3.1%. We've got the Dow up 825, up 2.8%. NASDAQ today up 360, up by 3.3%. Do want to point out that the Dow back above 30,000 at 30,316. Your 10-year 3.62%, your 2-year 4.09%. Spot gold up 1.5%, 17.25 the ounce. Crude today up 3.2%, 86.33 a barrel. A lot of people asking, how close are we to a bottom? Have we seen it? That question for Sylvia Jablonski, CEO at Defense ETFs. She was our guest right here on Bloomberg Business Week.
You know, you've got gas falling, you've got mortgage rates that are ridiculously high and going higher, sky-high dollars. So there is this evidence that we're a whole lot closer to a bottom than we have been in recent months. And, you know, I think that maybe we'll have some more pain in the near term, but it's getting there.
All right. So again, recapping, Twitter up today by 22.2%. We're talking about Twitter. Cannot ignore Tesla. Tesla shares up today by 2.9%. And that's a Bloomberg Business Flash.
Where were you 30 years ago?
I was at the Dow with 3,000. The Dow was roughly 3,000.
Was there, Charlie, was Bloomberg Radio had it started?
That Bloomberg Radio started actually in 1993. I believe we went on the air January 4th, and our founder was kind enough to give us the New Year's weekend off so that we didn't have to start broadcasting until that Tuesday.
And you've worked every New Year's weekend since then, right?
And Thanksgiving Fridays as well. What life in broadcasting.
But
I'm not
Fridays
complaining.
Are tough. Oh. Well, we love you, Charlie. You
My
really
pleasure.
are just so special to all of us. All right, Charlie Pellet there. Well, one of the things we've been also talking about all day, in addition to Charlie being here 30 years, is our Bloomberg exclusive about Elon Musk saying, yep, I'm going to do this deal. I'm going to buy Twitter.
I've been eager to talk to Mandeep all day. Mandeep Singh is Senior Analyst for Technology at Bloomberg Intelligence. He joins us on the phone from New Jersey. Mandeep, are you busy at all today?
Well, it's always interesting when you're, looking at or what he's doing, and he's quite vocal about his intention, so that's a good thing, right?
Yeah.
Well, I just wanted to jump in because I've been wanting to know the answer to this question for the last few hours, Mandeep. We saw shares of Twitter spike today, but still not trading at $54.20. They did move higher on the day. Wow, just huge, up to $51.40, Carol, higher by 20%. Why aren't they trading at $54 or even closer to $54?
Well, so if you read the amendment, the 13D amendment, potential debt contingency, wherein the debt component in the deal is about $12.5 billion, and I think it as okay. This is one thing that could change, with this intent that he has clearly conveyed to the board that he wants to close the deal contingent on all the financing, and I think the equity side is pretty good, given he has sold a bunch of stock and he has 10% ownership, but it's really the debt side of it. And look, it's not a problem in case, the debt financing doesn't go through. He can get private equity buyers step in. They're already contributing $7 billion. They could raise that amount, and I think you can still close the deal.
Yeah, pressures on Morgan Stanley and others, I guess, to step up, right? They committed the debt financing for the deal back in April, and with the plan to sell most of it to institutional investors. Mandeep, we've talked with you over, is it months now?
Yeah,
right?
Not years yet, Carol, just months.
Just feels
Might
like
feel
years.
like years.
What do you make of kind of the trajectory going back to Elon Musk's initial bid and then backing off and then coming back to where we are? I mean, ultimately, fundamentally, taking this company private, is it a good thing for Twitter?
I do think it's a value increasing option for Twitter to go private, fix their cost structure, come up with a better business model. We don't know what that business model is going to look like. My sense is it'll be probably like LinkedIn, the way Microsoft has monetized LinkedIn more and more. But look, I think a lot has changed from the summer. Like back in June, there was that buyer's remorse that Musk was going through because the market had tanked. And I think the market has stabilized somewhat, especially from a Tesla owner perspective. His stake in the company is close to $170 billion. And look, I mean, he can afford this deal. And the sentiment around the company has gotten better and better. Tesla just had an AI day on Friday. They're trying to recruit the best talent around autonomous driving. And if he goes through a trial, in a couple of weeks, that's not going to look good from a PR standpoint, given he's the face of Tesla. So I think that's what he's trying to preempt here.
You said he can afford it. He's the wealthiest person in the world, according to the Bloomberg Billionaires Index. As of today, his net worth is $222.6 billion. It's a decline of close to $50 billion so far this year. Mandeep, big changes we can expect at Twitter, at least to the product. And it's interesting that you bring in the LinkedIn-Microsoft analogy here, because Microsoft had LinkedIn had the power of Microsoft behind it. That's not necessarily going to be the case with this.
Yes, but look, I think with Elon, given he's running Tesla, and Tesla seems to be at the leading edge of, AI. They just unveiled the Dojo supercomputer. Now, a lot of these things intersect at some level when you think about, the next phase of AI and how it can be applied in the context of a social media platform. And I don't think he's going to run the company himself. He's going to run Twitter. But at the same time, this company needs to change in terms of how it monetizes engagement and what it can do in terms of just, the business model. I don't think subscriptions is the clear answer. It really is a combination of ad subscriptions and probably something else. From a product perspective, they need to improve, to really take it to the next level.
Hey, 10 seconds. So you think this is it? The deal's going to get done?
Yes, I think he just wants to avoid the negative PR, and the Twitter legal side is very strong, so he realizes that now.
All right, Mandeep, thank you so much. Mandeep Singh, Bloomberg Intelligence Senior Technology Analyst, joining us on the phone in New Jersey.
Let's get to Washington, D.C. now for an update on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Former President Donald Trump is asking the U.S. Supreme Court to intervene in the fight over government papers that were seized at his Mar-a-Lago home. He's asking the justices to let a court-appointed special master review 100 documents with classified markings. An appeals court blocked such a review, saying it could not discern why the former president would have an interest in the classified documents. Well, the Supreme Court will be deciding a key voting rights case this term, and today the justices heard arguments in a lawsuit seeking to force Alabama to create a second black majority congressional district. Justice Sonia Sotomayor spoke of a lower court's ruling challenging the state's current congressional map.
They found that the respondents' map respected traditional districting better than the state's map.
Only one of Alabama's 7 congressional districts is mostly black, even though 27% of the state's residents are black. Alabama argues that it's taking a race-neutral approach to redistricting. Micron is making a huge financial commitment to New York and plans to build a chip factory in the state. Governor Kathy Hochul tells Bloomberg it is a landmark deal.
There's never been an investment this big made in the state of New York. over $100 billion over the next 20 years to build something that is something quite extraordinary, that this will be the home and the manufacturer of the largest semiconductor manufacturing facility in the country.
New York Governor Hochul. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Hey, Nance, thank you so much. Nancy Lyons in our Washington, D.C. newsroom. So we've talked about Twitter a lot. This is our most read story on the Bloomberg today, and the Bloomberg exclusive that revealed that Elon Musk is going after Twitter, and it looks like...
Wait, what happened?
Wait, no.
What are you talking about?
How did I miss that? Hey, another most read that's also a Bloomberg exclusive notes how the billionaire founder of Bridgewater Associates, we're talking about Ray Dalio, after 12 years of trying, is finally letting go and giving up control of the company that he created into the world's largest hedge fund.
Yeah, this Bloomberg exclusive from Eric Schatzker coming out this morning just after 10. As you mentioned, billionaire founder of Bridgewater Associates, the co-chief executive officer, Nir Bardea, said in an interview, quote, "Ray no longer has the final word. That's a big change."
Yeah, also a milestone. While some of his peers converted the firms that they founded into family offices or closed shop, Dalio was determined to create something that outlasted him. He initiated a transition plan as far back as 2010, figuring it might take as little as 2 years. He struggled, though, in his search for successors, according to Eric's reporting, and now that those people are in place, handing over control is the final and irreversible step.
What I like about this story, well, I mean, it was a great scoop. The way that Eric starts it, after 12 years of trying, Ray Dalio is finally letting go. Let's go back to 12 years ago, right? He's been trying to essentially give this up since 2010. Eric writes that he initiated a transition plan as far back as 2010, figuring it might take as little as 2 years. Dalio, though, struggled in his search for successors. Now that those people are in place, handing over control is the final and irreversible step.
You know, I just read that.
Oh, really? Oh, my God. I'm sorry. I was actually looking for that while you were reading it.
No, we've been scrambling through, reading through.
Wow, I'm the worst. I guess this is I guess I'm not on air tomorrow.
Matt Miller's going to be like, oh, man, you're tough on
I'm not
him
on air
again.
tomorrow.
Yeah.
No, I deserve that one.
No. It's okay. Love you. Ray Dalio also, by the way, saying he no longer
Even our
thinks...
bosses are all listening right now.
Am I too hard on him?
No.
Nobody say anything. Anyway,
Yes.
he no longer thinks cash is trash, and that the short-term interest rate is now about right. So weighing in on that, this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Twitter shares up today by 22%. Elon Musk revived his bid for Twitter at the original offer price of $54.20 a share, potentially avoiding a courtroom fight over one of the most contentious acquisitions in recent history. Twitter ended today's session at $52 a share. Again, Elon Musk offering $54.20. The Dow, the S&P, NASDAQ all rallied today. Second surge in a row for the U.S. stock market, up another 112 points. The S&P now at 3790, up 3.1%. Stocks ending today's session at the best level. The Dow up 825, up 2.8%. NASDAQ advanced today by 361 points, up 3.3%. 10-year yield 3.62%. The 2-year yield 4.09%. Spot gold up 1.5%, $17.26 the ounce. West Texas Intermediate crude up 3.1%, $86.23 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, consumers' overall use of cash, certainly in the U.S., has declined steadily in recent years as digital options like Venmo and Apple Pay compete with credit cards and now offer contactless payment. Look around the globe to a place like China, and that is especially the case and has been for a long time.
Yeah, very pleased to have with us this afternoon Martin Chorzempa, Senior Fellow at the Peterson Institute for International Economics, also the author of the new book, The Cashless Revolution, China's Reinvention of Money and the End of America's Domination of Finance and Technology. I want to start with a little anecdote from a trip that I had to China back in 2017, Carol and Martin. I remember I was there with classmates from graduate school, and there were some classmates who had trouble buying something because they didn't actually have the WeChat app. And the store that they were going to in the mall didn't accept credit cards and didn't accept cash, Martin. And I'm talking 2017 here. This is 5 years ago. They were already cashless in this entire mall in Shanghai.
Yeah, this has really occurred in an incredibly fast way in China. I moved to China in 2013 to live in Beijing and research its financial system, and everything back then was quite backwards. You had to go through the state-owned banks. There were limited investment options, very limited capability to get loans. And then once the big tech companies were invited in to disrupt payments, this whole edifice of financial repression and backwardness went away in almost a blink of an eye. And I was really there on the ground watching how it transformed daily life in China as cash pretty much disappeared. And foreigners used to cards were essentially second-class citizens if you didn't have these apps. But also elderly people, the poor, can be left behind when cash just disappears so quickly and you move into this convenience. You forget that there are drawbacks too.
Why was China so ripe for them to become a cashless society?
Well, the financial repression that existed up until around 2013 meant that everything was so backward that digital payments were a massive improvement on it. And if you compare that to the United States, generally credit cards work for the vast majority of people, and that's already really a digital payments method already. So it was just ripe for a revolution. The only thing that was missing was a political opening that would allow brave entrepreneurs to take a real risk and to disrupt the system. And that's what occurred around 2013. The party recognized that ordering the banks to modernize was not going to get them what they needed. Instead, they needed to bring in big tech companies that could use technology in a new way to update their financial system and hopefully provide an engine for growth for them going into the future.
So I'm wondering how the U.S. looks to this. And again, I go back years ago, Martin, and the idea of when Facebook Messenger was spun off of Facebook's main app. The guy who ran it, David Marcus, was coming from PayPal, and he said, what I want to create here is the U.S. version of WeChat. Is the U.S. close at all to what China is doing when it comes to revolutionizing payments? Because that didn't turn out for Messenger. And Marcus, by the way, is no longer at Facebook or Meta Platforms.
Yeah, so what's really interesting in this book is that you can see the flow of ideas reversing. Initially, these companies in China are copying PayPal, they're copying eBay and other players in the U.S. market. And then what happens around 2014 is that there's real frontier innovation going on in China that is not happening here. You would need dozens of apps in the United States to approximate what you can do with one of the super apps in China. Think borrowing money, booking travel, paying for something, buying things online, getting a taxi, just about anything you could want to do in your daily life, you can do on these apps. And really, Silicon Valley has not discovered the killer app that's allowed them to create this kind of fundamental innovation. And we essentially pay the same way that we always have. And even if we pay with phones, a lot of the underlying infrastructure behind that is the same card infrastructure that we've been using for a long time.
All right, so what does this mean? You know, it's interesting how we talk so much about the U.S. dollar, the dominance, the strength of it, what it's been, you know, the impact on the global world in this current macro environment. How does something like the cashless revolution maybe diminish the respect that the U.S. dollar has garnered for so long?
What's really interesting is that despite the incredible strength and revolutionary capability that China's fintech firms have had in China, they've had relatively limited success abroad at disrupting the current dominance of U.S. financial firms. So just about anywhere in the world, I was in a pharmacy earlier today and in Washington, D.C., and they accept Alipay, even though few Chinese people are visiting these days. But very few foreigners actually use Alipay. That includes Americans, that includes Brazilians. Everywhere that this has been tried, it hasn't really succeeded yet. And that means that the U.S. still retains a lot of dominance because the pipes that carry the dollar's advantages tend to be bigger, bank-based systems that China has a difficult time disrupting. And at the same time, my message for the U.S. is that you really can't be complacent. We have to keep making sure that, you know, cross-border payments, especially where the dollar dominates, become a lot more convenient and easier because right now, there are a lot of problems in that space, and improvement is not really going very quickly. And that opens an opportunity for China to disrupt us in the way that fintech companies have disrupted the state banks in China.
But Martin, could this actually happen given the reticence around a company like ByteDance, the parent company of TikTok, and given the way that it's just garnered so many lawmakers' attention over concerns about Chinese control? Like, would lawmakers ever allow that to happen when it comes to the financial sector here in the U.S.?
I don't think they would. And that's why the disruption is unlikely to come in for a battle for your wallet in the United States because the U.S. would ban it. But the ideas of the Chinese fintech revolution are spreading around the world. And a lot of countries that are not the U.S. are open to more ways of paying and really don't like necessarily the way that the U.S. has a stranglehold on the global financial system through the dollar. They might like an alternative, even if it has some more controls on it, because China doesn't allow the renminbi to be freely usable, even if there's some sort of programmability. You know, if China launches a central bank digital currency and, you know, this is a tall order, but if it interacts better with new digital currencies that other countries around the world launch, then the U.S. could potentially be in a situation where, you know, we're analog in a sense, and the rest of the world is operating on some new kind of system, and that reset allows China to come in and shape standards in that space in a way that we might not be ready for.
Well, and it is interesting when you look at like the emerging markets overall, you know, how they have been adopting in many ways financial innovation much more quickly and more readily because they don't have the financial infrastructure that the developed world has. So some really interesting food for thought. Martin, thank you. Really appreciate it. Martin Trzempa, he's Senior Fellow at the Peterson Institute for International Economics. His book, The Cashless Revolution, China's Reinvention of Money and the End of America's Domination of Finance and Technology. What are you thinking?
It was 2018 when I was in China, not 2017.
But different, right?
Oh, yeah.
I think it's going to be hard because there's such the financial establishment and traditional players like.
I mean, but you have to understand what people use WeChat for. It's like the operating system of a phone.
It's like everything. Right?
Everything.
Yeah. And how do you get that to translate here?
Facebook tried with Messenger.
All right, folks. Of course, a big day for Twitter. Elon Musk. Check it out. If you want more, go to Bloomberg.com. For Tim Stanovic and the Business Week team, have a good and safe evening. This is Bloomberg.